This video is sponsored by PLAUD. For a few months now, you might have been seeing the headlines about a digital euro. And you might be wondering, what the hell is it? Surely not another type of crypto, right? Don't worry. It's not. And although your daily life and how you pay may not be much affected, it could revolutionize the European digital financial space. You see, major retailers, Aldi, Carrefour, H&M, IKEA, and big payment providers like Worldline and Nexi have asked the European Union to step in. Their message is that the current system is costing Europe money, privacy, and control. So how will things actually change with the digital euro? To make digital payments today, you usually start by opening a bank account with a commercial bank like Santander or ING. This involves submitting documents like proof of identity, address, and sometimes income. Once approved, you get a debit card, typically from Visa or Mastercard. And when you tap that card at the local supermarket, it feels instant. But your bank isn't actually paying the store right away. Instead, the payment request goes through a private network like Visa, which talks to your bank to check your balance and approve their transaction. The actual money moves between banks much later, often taking a day or two, with card companies and intermediaries charging fees along the way. With the digital euro, things will work differently. You download an official euro app from the European Central Bank or a licensed provider, and will go through a quick identity check. Once verified, your free digital euro wallet is ready to use. Think of the digital euro wallet like PayPal, a standalone app for holding and sending money. You can top it up from your bank account. You can send or receive digital euros from others, or you can pay with it at your local supermarket. Just like today, you tap your phone and the payment goes directly from your wallet to the store. But unlike today, there's no Visa, no Mastercard, or private bank in the middle. And unlike PayPal, there's no private company involved at all. It's public money, backed by the ECB, like cash, but just digital. And to support financial stability, there will be a limit on how much digital euro any one person can hold. And users wishing to pay more than this set limit would be able to do so by linking their digital wallet to their bank account. Now, before we get into whether the digital euro is actually a good idea, or if it risks drifting towards something more like China's authoritarian model, a quick word from our sponsor. At EU Made Simple, we're constantly on video calls with EU officials, journalists, sponsors, and our team across Europe. These calls are full of ideas, but remembering every single detail, that is hard. We used to scribble notes or stick post-its everywhere, until I found PLAUD. It's an AI-powered note-taker. One press and it records the meeting. Any ideas in the group? Then transcribes everything into clean text with summary and action points. I don't even need to touch a pen or keyboard. It works completely hands-free. And when I need to find something later, I just use PLAUD's Ask AI. I might ask something like, what are some of our video proposals from our French channel manager Paul? And it finds it in seconds.
So one of the videos that's been on my mind for a while is what does France get out of being in the EU?
The audio is crystal clear. It supports 112 languages, and you can get 300 free transcription minutes a month. Honestly, I could have used it back when I was a student. I can literally just get a summary of the latest lecture I fell asleep in. And in our case, in journalism, confidentiality is absolutely essential. PLAUD takes that seriously too. It's compliant with major security standards and uses AWS-grade encryption. Use my code EUMS10 to get 10% off when purchasing PLAUD Note or Note Pin. Link in the description below. Back to the video. So beyond cool features and convenience, the real question is, why does the digital euro matter? I mean, you can already pay for your groceries with ease, right? Well, because every time you tap your card, a fee gets paid. Not just to the shop's bank, but often to companies you've never even thought about. In Europe, most of those payments run through two American giants, Visa and Mastercard. Fees charged by Visa and Mastercard rose nearly 34% between 2018 and 2022, with no real improvement for merchants or consumers. Same goes for PayPal, who charge quite high fees for a lot of their business services. And then there's also strategic dependence. These are US companies. which means a huge part of Europe's financial infrastructure sits under foreign control. If the US ever wanted to apply pressure through sanctions or regulations, it could disrupt how Europeans pay and get paid. Not ideal for a continent aiming for more sovereignty. As ECB board member Philip Lane put it, Europe's reliance on foreign payment providers has reached striking levels. It exposes us to pressure and limits our ability to control critical parts of our financial infrastructure. Then there's fragmentation. Countries like France and Germany have their own payment schemes, but they don't work well across borders. So you end up using Visa or Mastercard, even though they sometimes fail abroad. Privacy is another issue. Every card payment creates a data trail, often processed outside of the EU, where GDPR does not really apply. And finally, this duopoly blocks innovation. European fintechs are forced to build on Visa and Mastercard's rails, pay their fees, and follow their rules. That makes it much harder to build smarter, cheaper alternatives. And the digital euro is designed to address all of these problems. No more fees flowing to US card companies. No more dependence on foreign-controlled infrastructure. And a more unified European system that works seamlessly across borders. Our data stays in Europe, protected by European laws and not processed overseas. And European companies can finally innovate without being locked into American payment rails. And not to mention the benefits for us, the consumers. It's one simple wallet accepted across the entire Eurozone. Whether you're buying a coffee in Lisbon or shopping online in Berlin, it just works. No extra fees, no switching apps when you travel. And it works offline too. Payments will be free for consumers and cheap for businesses. A big help, especially for smaller shops. And this isn't about replacing cash or cards. You'll still have a choice. The digital euro is just one more option, and it's designed to work even if you don't have a bank account, thanks to public and offline wallets. But as everything, it's not without controversy. Not everyone is convinced that the digital euro is a good idea. Some worry it gives the European Central Bank too much power, especially over our personal data. Even though the ECB promises strong privacy protections, critics fear it could one day be used to monitor how we spend or even limit what we spend our money on. Those fears are not helped by comparisons to China's digital yuan, which has already sparked global concerns. Unlike cash, the digital yuan is fully traceable, and critics argue it gives the Chinese state an unprecedented ability to track transactions and control financial behavior. Some worry that if Europe isn't careful, it could head down a similar path, even if the intention is different. Banks aren't thrilled either. If people move their savings into digital euro wallets, especially during times of crisis, it could destabilize the financial system. Some economists warn that this could trigger digital era bank runs. So when is the digital euro actually happening? The ECB started exploring it in 2021. 2 years later, in 2023, they entered the preparation phase, focusing on the tech, legal framework, and how it could work in practice. Right now, they're testing features like conditional payments and offline use, working with fintechs and payment providers across Europe. The key decision is expected later this year. That's when the ECB will decide whether to move ahead, with potential rollout between 2027 and 2028, if it gets the political green light. So we're not quite there yet, but make sure to stay subscribed to not miss out on any news and updates. This is my opinion. The digital euro is a good step forward. It could help Europe build stronger financial tools, like EU-backed bonds, better tax coordination, and maybe even a real capital markets union, where money flows more easily across borders. And what I don't fully understand is the criticism from people who are worried about European control, but seem fine with handing their data to big tech companies in the US. Isn't European ownership with EU privacy laws a better deal? As long as the digital euro stays optional, and it absolutely should, people can make their own choices. But giving us that choice seems like a smart move. So, if it eventually does come along, I will definitely use it. Make sure you check out our Capital Markets Union video, linked right here. Or if you'd like to know more about Denmark and their approach to migration, see the video here. And to support us further, consider joining us on Patreon. Thank you so much to our presidents, Jan Schauke, Christian Peter HVD, Daniel Unite Europe, Stefan Mr. Probot, and Rashid. See you in the next video.